Hello and welcome to IPPFA TV. I'm James McNamee, President of the Illinois Public Pension Fund Association, and with me is Dan Ryan, our project coordinator. Today we are with Mayor Phil Suess, the mayor of the city of Wheaton, and also the chairman of the Illinois Police Officers Pension Investment Fund. By way of background, Mayor Suess has served as the mayor of Wheaton since 2019 and previously served on the Wheaton City Council for 14 years. He represents the city on the DuPage County Water Commission and serves as the chair of the Commission's Finance Committee. In 2020, Mayor Suess was appointed by the governor to the Illinois Police Officers Pension Investment Fund as a trustee and is now the chair of that body. In March of 2019, Mayor Suess retired as a partner from a global investment consulting firm, completing a 40-year career in the investment and financial field. The mayor is a graduate of Northwestern University with an economics degree and has a graduate degree in business administration from Loyola University of Chicago. Finally, he holds the Chartered Financial Analyst designation from the CFA Institute. Phil, welcome and thanks for being with us today. We'd like to talk to you. Initially, what got you interested in public service to serve as the mayor of a community such as Wheaton?
Well, I've been in Wheaton since 1988. I had no expectations of ever becoming mayor or much less being on the city council. But when I came to Wheaton, there was a subdivision issue next to my house. So, why do people get involved? Well, usually they're angry about something. So it was working through this zoning issue that got me involved in local government in Wheaton.
And that's an interesting, because that's a local issue, but now you're involved in a statewide issue. You're now appointed to the investment board and have since been elected as the chair of that very important function, especially for us. Myself, I'm a retired police officer, so it's very important to me. What motivated you to be wanting to be on that investment board?
Well, one of the things, I represent the city of Wheaton. And the city of Wheaton has about $125 million invested in the consolidated fund. So I do tend to get involved in things that have an impact on Wheaton. You mentioned the Water Commission. Wheaton's the second largest customer of the Water Commission. So I just feel it's important as the mayor of Wheaton to be involved in things that have a direct impact on Wheaton. For example, with respect to pensions is the third largest expense of the city of Wheaton. So I'm really here in the context of representing Wheaton.
So you have a lot of experience in the private sector working with investments. Do you feel that gives you a lot of comfort and competency in dealing with your position as chair of the Police Officers Investment Board and giving insight on where the investment should be going?
Yes. Again, you mentioned I've been involved in the investment consulting industry for over 40 years, and that's been very helpful. Yes, we'll talk about pensions, but just in the role of mayor. I mean, if you're an investment consultant, you're dealing with committees, you're working with people to come to consensus, to build consensus. You're giving guidance as to how to proceed. So all of those things, A, it's a personal interest, B, it's important not only to the city, but to our employees.
So can you give us a brief update as to where the fund is now in terms of heading towards your allocation goals?
Yes, we're basically entering the fourth year of building out the investment portfolio. So as of today, we have assets of about $10.5 billion. We have fully implemented basically our what we call our interim asset allocation, which is essentially a 58% equity position. Longer term, we anticipate that equity position growing to about 65%. The key point is, as we've consolidated these various funds into the big fund, we've been 100% passively managed. We're now in the position we're starting to build out our portfolios into active management. So as of today, again, $10.5 billion, about $1 billion now is deployed to active managers, and we anticipate building that out over the next couple of years. As I said before, long term, we anticipate our overall equity position to be about 65%.
Now, do you feel the consolidated approach will meet its objective to earn more statewide returns on the assets and will realize, less, reduced costs because of, reduced administrative costs? Do you think it's going to hit those benchmarks of what was originally put out to us?
Yes. Everybody's situation here is going to be different, basically based upon the size of your assets. So for the smaller funds in particular, this is a dramatic improvement because previously, if you were less than $10 million in assets, you were constrained on how you could invest those assets. And that was quite detrimental. It restricted how much you could have in equity. So for the smaller plans in particular, this has been a big enhancement. For everyone, as we build this out, we're all going to get the benefits of scale. So for example, I said, the fund's currently about $10.5 billion. There's an additional $1.5 billion in assets that still needs to come in. That's likely to come in October. So you're going to be working with an investment pool of roughly $12 billion in assets. And that is going to give you scale in terms of expense with investment managers. It's also going to give you access to providers and products because of that scale that you wouldn't be able to do individually. So from that standpoint, yes, it's a big plus. The second thing in terms of expenses, last year, our fiscal year ended June 30th. Our expenses, all in, including administration and investment, was about 5.8 basis points. So that's a dramatic improvement relative to most funds on a standalone basis. Now, having said that, those expenses are going to go up over time as we build out the investment portfolio. But overall, yes, I think we've made tremendous progress with respect to the fees and overall costs. We've made progress with respect to the investment returns, and I think, yes, the consolidation is going to meet its objectives of increasing returns and lowering costs.
I'd like to turn it over to Dan now.
Thanks. Thanks, Jim. Mayor, I want to turn specifically to a matter regarding Wheaton, and that's your decision, I think it was 2022, to move towards pension obligation bonds. For the advantage of our reviewers, a pension obligation bond, when a district or a town has some unfunded liability, rather than amortize that within the fund with payments into the fund at a potentially higher interest rate, the community issues bonds, places those assets in the fund, and then the fund moves to fully funded or nearly fully funded. And the expense shifts to payment of the debt service on the bonds by the municipality. It was a real opportunity several years ago when interest rates were so low, and there was an opportunity to move in that direction. I know it's early in the game, but any feeling as to how that has worked out or will work out?
It has worked out extremely well. Okay. We were very fortunate as far as the timing, in that we kind of caught the bottom of the interest rates, and which was beneficial. And as rates have moved up, okay, what we're able to earn on that money has increased. And most recently, we have had some positive equity performance. So this has worked out extremely well for the city of Wheaton. And the reason we did it, we looked at this, and you look at the interest cost on your unfunded liability. And for the city of Wheaton, the interest cost on that was 6.75%. Okay. By issuing these bonds, we were basically able to refund that liability at an interest cost in the neighborhood of about 2.4%.
Wow.
And that transaction, after we fully fund our contribution, after we fully fund our principal and interest on the bonds, frees up $1 million a year for operations to the city of Wheaton. So this transaction made a lot of sense to us.
Very good.
And the other point, people say things about pension obligation bonds, they're risky. That's false. We basically refinanced an existing liability that was costing us 6.75% at a cost of 2.46%. We didn't take on an additional liability. We refinanced something that already existed at lower cost.
Very good. I have a follow-up question on it, but I just want to intrude for a minute. I'm a pension trustee in Skokie. We're just a little jealous. We were almost on the same time trajectory you were, but we were able to get to the market at 3.1%. But then and then right after that, there was the equity drop in the markets, but using what I'll call the Wheaton model. The village was giving us, the police pension fund, the money 1/12 every month for a year, and we basically waited till the bottom of the equity piece to put in most of the money. So thank you for that structure that you worked out for us. But just quick following up on the Wheaton experience, where did the idea start? Finance department, you guys, mayor and council, the funds themselves? Where did this come from?
The mayor.
The mayor, okay.
And, obviously, I'm familiar with this. It's something I advocated for very strongly, and we worked through a pretty detailed process to bring everyone along. There was some concern about it, given the magnitude of the dollars we're dealing with. I mean, our bond issue, I believe, was somewhere in the neighborhood of about $46 million. I mean, that covered both police and fire. So there was some concern about doing this, but at the end of the day, we got a 5-2 vote to proceed, and it has worked out very well.
So your answer to Jim's earlier question on the benefits of coming from the financial consulting world was a nice general discussion about cohesiveness and cooperation. In this case, it was a technical one.
Yes.
You were looking at taxable interest rates in the low to mid twos and said, basically, we have to do this.
Yes.
Very good.
And again, I just keep going back to, you had a liability at 6.75 and you reduced the cost of that liability to 2.46, whatever. And as I said before, that frees up $1 million a year in operations for the city of Wheaton.
That's terrific. And over the duration of the bonds plus interest, that's probably going to be $30 million. Almost the cost of the liabilities doubled.
Exactly.
Terrific.
And, the other part of this, not to get into the weeds, this whole pension ramp. Currently we need to be 90% funded by 2040, and as time goes by, the amount you need to contribute each year increases because you have fewer years over which to amortize that unfunded liability. So by going to the bonds, we basically fixed our cost. We took the variability out of this annual increase as you get to 2040.
That was a very smart play,
So
by the way.
that's another part of it that people don't really focus on.
Correct. There's an interest rate gain and also a structure gain on how the debt is financed.
We controlled the structure relative to what it otherwise would be.
Yeah, we as an organization put out to groups. Now, it doesn't fit for every community, as you know.
Yeah.
But it is a good fit for some, and it really worked well. And I salute you for what you did on that one. That really worked well.
As we leave that subject, then I'll send it back to Jim for some wrap-up questions. For the viewership, I don't know what taxable 20-year municipal bonds are right now, but the Treasury bonds 4%, so we're somewhere north of that. The opportunity right now is probably nowhere near as advantageous. So if there's an interest in these things, talk to your financial advisors, get the conversation going. Things can change, and if you have more knowledge, you'll be ready when the time comes. Thank you, Mayor.
Well, I just wanted to say thank you for being with us. Do you have anything else you'd like to share with us and to our participants out there?
And I would just go back to the fact that I think this consolidation is working well. I think it's meeting its objectives in the context of the investments. And I think we all need to continue to work together on this. Sometimes there's a little bit of a tension between groups, and let's just all keep in mind that, yes, we look at the pension funds, but, from the standpoint of the city of Wheaton, I think from the standpoint of the municipalities, we want to do the right thing. These are our employees, and we want to take care of our employees. And I think that's the context in which the pension discussion should be viewed.
Very good.
Well, we appreciate that, and on my end, as a retired police officer, obviously we look at this money as our money, so we're always very interested in where it's going. We thank you for your volunteerism, because you're not paid for the position you're serving in. So that's a lot of volunteer time on you, so we thank you for that. And for this segment of IPPFA TV, we want to thank our viewers for tuning in, and we're going to close right here.
Well, thank you. It's a pleasure to be with you.
Thank you, Mayor.
Thank you. I hope that worked out.